With the stock market about to leave summer behind, now is the time to buy, according to Jerry Castellini, President and Chief Investment Officer at Castle Ark Management. In fact, he told CNBC on Thursday the market can move up 10% just to get back to fuller valuation. He said market watchers have been focusing on the wrong things, such as emerging market weakness, politics, and earnings that some worry may have reached their peak. However, Castellini said the global economy is poised to turn. So how do the charts look? Let's go see. Although we will likely have a pullback, perhaps even as soon as next week, for the most part, I'm going to agree with Jerry Castellini. Everything, in my opinion, looks good. We're going to look at the three major indices, but we're going to stick with the 2-year weekly charts. Beginning here with the spiders, you can see that we closed on Friday at 290.31. Everything looks good. Coming down here in the correction, and then the consolidation, and then on our way up. A nice dish, and everything seems to be moving in a good direction with decent power and strength. Looking here at the MACD, we can see the same thing. The move down, consolidation, and now the move on up. This point here, we had a nice reflection with the fast line reflecting off the slow line, and then it continued on up here, and we have good acceleration both with the fast line and with the slow line. That looks impressive. Shown here in the histogram as well, relative strength index, you can see this rocket shot heading on up. Nice power, nice direction. You see that also here in the stochastics. We're getting toward the top of the stochastic, but we're still continuing on upward. And we could even curve a little bit for both the slow line and the fast line and continue to head up. So I think that's what's going to happen. Volume looks fine, maybe a little light, but still not too bad. And the Williams has been in this territory, the upper portion here, between 20 and 0 for several months here. And I think it's going to stay up there, showing that we have got good strength and direction. Going back here to the price chart, everything looks fine to me with regard to the spiders. So now let's go to the diamonds. 2-year weekly on the diamonds, and as we've discussed before, the diamonds, or the Dow, is the laggard of the three indices. It's behind both the S&P and the NASDAQ, but still, it looks good. With the top here, the move down, consolidation, and then the upward movement. Nice dish, good direction, good power. Just like the S&P, it's just a little bit behind the S&P. You can see that here also in the MACD. We just crossed through the slow line here in mid-July, but we're accelerating on the upside, both the fast line and the slow line. Histogram shows the same. Again, rocket shot with regard to the RSI. Moving on up in a very good direction with good strength behind it. Same thing, stochastics, we're a little bit behind the S&P on the stochastics. We're just starting to get to that upper top area, but looks good. Volume also a little tepid, but that's not too bad. And then the Williams, again, elevated here in this territory between 0 and 20 for the last few months or so. Back up to the price chart. Again, everything looks good for future rise in the diamonds. Let's now go to the NASDAQ. 2-year chart on the NASDAQ, and as we've discussed before, the NASDAQ is ahead of both the Dow and the S&P. We've got a pretty good top consolidation, and then the actual upward move started long before the S&P and the Dow, but it's continuing on up very strong. You see that strength here as well. From the bottom on up, we did have a little bit of a consolidation here, but it is reflecting, and on up it goes, and the slow line is going to continue accelerating as well. Same thing shown here by the histogram, and the relative strength index also very strong, moving on up. Same thing with the stochastics. You get to this upper area into the overbought territory between 80 and 100, and what happens is you get these reflections on and off of that slow line as it continues to mature. But it's a very good movement. Moving on down here into the volume. Volume is fine. And then lastly, the Williams in this upper territory again for several months. So looks very good here. Back on up to the price chart. Everything looks to be moving in the correct direction as long as you're long. So let's go take a look at one more chart. This is the 2-year weekly chart on the 10-year bond, and the symbol is TNX. One thing I just wanted to point out with regard to the 10-year, I'm waiting for it to break down, but it's not going to break down yet. And we can see this here. It's setting up this bottom at this point there, and it's hit several points along the way, here, here, and here. One could take a look at that and say that is a head and shoulders, but not in my opinion. Let's move on down, and I'll show you what I'm looking at. You can see here that the MACD has been heading on down, and it's consolidating, somewhat like it did here in this period here, came down, consolidated. So again, coming down, and I think it's going to consolidate here. So here is the issue. The issue is that there's a divergence. The MACD is showing that it's weakening. However, you go up here to, again, the price chart, and it looks like we've got this bottom set in here, and the actual price is not weakening. So in my opinion, the strength is here in the price chart. The strength is going to remain. The MACD is going to head on down. It's going to reset as it did, say, back here or in this time frame here, and then it's going to head back on up. So what that means is that the 10-year, which is yielding somewhere around 2.853 as of the close today, Friday, I expect that that yield is going to head up. We're going to test that 3.0 again in the near future, in a few weeks or so, and it actually might head up above 3.0. We'll see if it can get to 3.2. So it's not going to be a breakdown yet, and so I'm not going to re-enter TLT for the time being. So let's keep our eye on this. This is going to be very important. So for today, that's ChewDog Charts, and I wish everyone a wonderful holiday weekend. And for those of you that are new, please subscribe. Follow us on our journey along with the stock market. Again, ChewDog Charts. Thank you.